Hello and welcome to the Flipping and Wholesaling Houses in New York show. I am Michael Pinter. I teach you how to start flipping or wholesaling houses in New York, or if you're already doing it, how to grow your business. Today we are talking about how to use home equity to invest in real estate. So that's a pretty broad question. I'm going to deal with a few possible solutions. At the end, I'm going to tell you what I think you should do if you're thinking about doing this. So a couple things. The light's terrible. I'm sorry, I'm driving. Okay. So the clearest, most obvious answer on how to use home equity to invest in real estate is to tap into your home equity, right? Let's explain what home equity is. Equity means the part of your home that you don't owe, right? That you own, right? So if you have a house that's worth $500,000 and you have a $250,000 loan on it, you have $250,000 in equity. So there are two of the most obvious ways to access that equity are A, to take out a first cash out refinance mortgage. So if your rates are higher, you can refinance and get a bigger loan and get some money. So maybe take $100,000, $200,000 out of your house. I don't know how much equity you have. I'm just throwing out numbers. Or that's the most obvious way. That's a little expensive because of our closing costs. Now, if you're going to have significant savings on your rate, sometimes your payment can stay the same and you can get all this cash out. Something to think about. The other way is to get a HELOC, a home equity line of credit, or a home equity loan, which is a fixed loan. So those are two loans that you can get out at our second mortgages, right? Your first mortgage will stay in place, and you get either a line of credit, which will allow you to access it. So let me just give you some run numbers to give you an idea. Well, let me give you numbers first about cash out refinance. In general, they'll let you cash out refinance probably 75 to 80% of the value of your home, assuming your credit is good and your income is sufficient to qualify for the payment. You can get about 75 to 80% on your house. In some situations only 70, but I'd say 75% is probably a good idea. Now, home equity line of credit, very often they'll go up to 90%. So they'll give you more. And they'll give you, let's say, a line of credit. So let's take some examples. Let's say you have a $200,000 loan, existing first mortgage balance on your house, and your house is worth $500,000. You could take you could refinance that and get, 75% of 500,000? I'm not so good with the math. 100, 125. You could get 125 off of 500. You can get a $375,000 first mortgage, right? So in this case, you'll cash out something like $175,000 minus closing costs, which could be $10,000, $20,000 in New York, unfortunately. And then if you want to, on top of that, you can get a home equity line of credit for another 15%. So another $75,000. So that's the way to get money out of your home. They also have things called home equity loans, which are not lines of credit. And that means you'll get the money and you'll start making payments on it. The advantage of a line of credit is that you don't have to use it right away, and you can take it as you need it. So you're not going to pay interest on it if you don't use it. The disadvantage of a line of credit, I can just tell you, is that when things really hit the fan, like in 2008, 2009, some lenders just shut down their lines of credit. They said, I know we told you this is going to be available, but we're changing our mind now. In general, they have the right if they feel the value of your property dropped. So that's what happened in 2008, 2009. So just understand that that could happen. It's unlikely, but it could happen. By the way, also at that time, they were giving like 100% lines of credit. So they knew that they were at big risk, and they didn't want to, the lenders did not want to take on that risk. So those are the ways to get equity, your home equity, out of your house. Now, what do you do with it, right? What's the point of this, right? So, investing in real estate. So the most obvious thing that you're going to see on the internet is investing in properties that are going to be cash flow producing. And in most parts of the country, you can buy single-family homes and they'll be cash flow producing. You buy them for $100,000, they make $1,000 a month, and the numbers make sense. In most areas in New York, it's very, very hard for a single-family property to be cash flow producing. Now, it does work for multifamily, so 2 or 3 units, that does work. Well, not does, but could work. More likely can work. So, in this situation, what you might want to do is you might want to take that money and buy a multi-unit property, and that money you take out is going to be the down payment on it. Now, you have to make sure a few things happen. Because I've seen so many people come to me and say they wanted to become real estate investors and they were going to buy a property that met one of the following things I'm going to tell you. The two most important criteria if you're going to invest in an income-producing property are A, that you're buying it at a significant discount. And this is the part that confounds people. Now, I only buy properties at significant discount. So for me, buying properties at discount is just the way I do business. But people look at it and don't understand what a significant discount means. So somebody came to my office once and said, I'm buying a property, it's a great deal, it's worth $450, and I'm able to buy it at $420. I said, listen, it's not a good deal because you're never going to get your money out. So this is going to be a one-time thing. Also, she didn't meet the other criteria, which means you need to be significantly cash flow positive. Now, that's a difficult question. What is significant is different for everybody. But if something's only a small $100, $200, even $300 cash flow positive each month, you've got to understand that you're only one major repair or one capital improvement away from being cash flow negative. So roof leaks, it's a couple $1,000s, right? Boiler needs to be replaced, a few $1,000s. Some major problem that's not covered by your whatever your insurance deductible could be. Your insurance deductible could be $5,000. So somebody drives to your house, you're gonna have to lay out $5,000 for the insurance deductible. All those things will make something that's not significantly cash flow positive, cash flow negative very quickly. So I would say you need $500, $1,000 a month so that you can put aside money for capital improvements, and you can put aside money so that when something breaks, you have a reserve fund for it. And most people don't do that. You also need to figure in your cost, either your cost financially or time of managing the property. And I can tell you that I do manage my own properties. I've managed properties since 2004, and it's not so simple, right? And I manage property for other people, and you need to know what you're doing. It's not simple. And I've seen landlords make the same mistakes 100,000 times over, right? They don't raise rents, they don't screen tenants well, they are not on top of tenants who don't pay, they don't make what's the word I'm looking for? They don't make the repairs that just standard maintenance that'll prevent bigger problems later. These are the standard problems that landlords do, and if you've never been a landlord, you're going to probably have to learn the hard way. So now there are other ways that you can use your home equity, right? You can take your home equity and you can invest with some jerk like me who will buy a property to flip or buy a property to wholesale, and that is a quicker return on your money. And I'm not going to say it's guaranteed, but it's pretty close, right? If I'm buying something at a significant discount and then I let you invest in it and you want to fund the whole deal, you're going to get a strong rate of return for as long as I'm in it, and I'm usually not in it that long. So you can return your money multiple times. So I would say that that's another way you can take home equity and use it to invest in real estate, right? I do take private lenders. I don't need any now, but at times I do. And if you're interested in something, you can call me. My number is below. My office number is 516-209-2010 if you're interested in investing. But I would say that, hi Christian, I would say that it is an interesting thought. You have to be able to afford it, right? You have to understand that when all the home equity is out of your house, can you still make the payments and be comfortable? Because sometimes a lot of investing is longer term, right? With me, it's shorter term, but even with me, it could take, if we're getting into a real flip, it could take 9 months. So you need to be able to make those payments for that amount of time. And I would certainly recommend the home equity line of credit, where you're not going to pay interest on it until you use it, over any other home equity products, including refinancing, unless your rate is really high, because it's something where it's not expensive, costs a few $100s to get, and it'll just sit there and you can have it available to you, and it'll let you access the money when you find an opportunity to invest in. So that's something that I'd recommend significantly. I hope this was helpful. I hope it answered the question. I think this was the answer to the question. But if you're interested in other ways I can help you, go to howtoflipnewyork.com. Just getting on the Van Wyck here. And of course it's backed up at 7:11 in the morning. howtoflipnewyork.com. If you're interested in my course that teaches how to do what I do, go to howtoflipnewyorkcourse.com. If you're interested in one-on-one coaching, go to coaching.howtoflipnewyork.com. And if you're watching on YouTube, please subscribe. I hope this wasn't too shaky. I'm sorry. I can't keep the phone in the holder because then you can't hear me. So I have to hold it. And I got to watch the road. So, and if you're watching on any medium, please click the likes. The thumbs up really helps me. Keep the comments coming. Comments help me. I go live 5 times a week. Very often I have completely blanked out on what I'm going to say. There are no bad comments. So any question you ask me, if it's a simple answer, I'll just reply. If it's something that I've covered recently or covered in depth, I'll send you links to a video or videos. And if it's something new, I'll do a video on it. Thank you very, very, very much for watching.